minutes. Via email, all registrants will receive a copy of the recording of this webinar. You can ask questions at any time by using the questions tab in the Go to webinar panel on your screen. And if at any time you experience any trouble with sound, we recommend that you exit the webinar and then log back in again. Now, on to zinc. For Mines and Money London, after gold, perhaps helped by the zinc prices in March and April of the 2019 period, we've seen a big increase in attendance in Mines and Money London from companies who are exploring or mining zinc. Examples include NorZinc, Adriatic Metals, Trevali, White Rock, Panora Minerals, and Foreign Mining, some of the companies who are coming to present their projects. And also, I think probably behind sort of like gold and copper, zinc is probably one of the most sort of popular metals amongst investors that I go and speak to. So to discuss some of these issues, we're joined by our four panelists. Ryan Cochrane, who's zinc strategist for the CRU group. Ryan joined CRU in 2017 and oversees base metal supply and cost research. Ryan has over a decade's experience as a metals analyst and geologist, and has worked on gold and polymetallic projects in South Africa, West Africa, Armenia, and the Northern Andes. We're also joined by Don MacDonald, President and CEO of NorZinc. Don has a degree in engineering from Oxford University, is a CPA CA, and has been involved in the development or operation of over 20 mines in North and South America. Over his career, he's been involved in the completion of mine financing and M&A transactions totaling over $5 billion. He joined NorZinc in mid-2018. Matthew Gill, CEO of White Rock Minerals. Matthew is a mining engineer with over 35 years experience. He serves as Managing Director and COO of White Rock Minerals, has been CEO of White Rock Minerals since March 2016. He is also a three-time winner of the Australian Mine Manager of the Year Award and received the Oz IMM Leadership Award in 2008. And last but by no means least, we're joined by Ricus Grimbeek, President and CEO of Trevali Mining Corporation. Ricus is a mining engineer with nearly 3 decades of experience in the resource sector. Before joining Trevali, he was Chief Operating Officer of Vale's Base Metals North Atlantic operations, where he held responsibility for the operating and financial performance of 16 mining and refining operations in 4 countries. Previously, he was President and COO of South 32 Australia, overseeing 6 operations in Australia and Colombia. Welcome to our 4 panelists. I'd like to start off our discussions by looking at the supply, demand and price of zinc. So let's start off by just having a bit of a deep dive by discussing the fundamentals. Turning to yourself, Ryan, you're CRU's zinc strategist. What does the metal supply and demand picture look like, and how is that likely to develop in the future, and why?
Thanks, Andrew. Well, thanks for having me. I think you actually have to look at the zinc market from 2 aspects. You need to look at both the metal market and the concentrate market. And I think what's really interesting with zinc is that you've seen a very, very long lag between the refined market actually getting out of deficit. So we saw in April 2018 or March 2018, zinc prices peaked. They then came under pressure after trade war rhetoric. And it really interestingly, as the prices peaked, you started to see the concentrate market, which at the same time, April 2018 or so, was the tightest point on record by our numbers. So the concentrate market turned somewhere in the middle of 2018, and you've seen spot treatment charges move from sort of sub 20 up to present levels of around 280, 290 for clean concentrates. You've seen a dramatic reversal in the concentrate market. I think what surprised a lot of people, including ourselves, is how long it's taken for that move from deficit to surplus in the concentrate market to actually flow through to refined metal. So to put that in perspective, I think this year we're still expecting a full year deficit in the refined market, which would be the 4th consecutive metal deficit. So a very, very protracted metal deficit. That said, we do think this has turned, and we think right now, as of the middle of 2019, we think we have moved into a more balanced refined market. And how this is going to play out in the future, I think what's clear, I think that the main points you need to be looking at in the zinc market is what's happening on the supply side still. Between this year and 2020, we're looking at 1.2 to 1.3 million tons of incremental mine supply growth, at least on paper. And the demand prospects for zinc are far less enthusiastic. So perhaps about 100,000 tons, even perhaps a little bit more than that by end of 2020. So I think you're moving into a surplus period, at least over the next 12 to 18 months. What's really interesting though is how that metal market turns. And so far, as I said, it's been lagging. It certainly has lagged a lot more than people expected on the refined side. So that's kept the refined market a lot tighter than people expected at least 12 months ago.
So bringing Matthew Gill of White Rock into the conversation, can you perhaps just tell us a little bit about White Rock, and then also, I guess, just from your own personal experience, how you feel the supply-demand dynamics for zinc have actually changed?
Yeah, thanks, Andrew, and thanks for the listeners to take the time. So White Rock is Australian listed. It's a little bit unusual. It's got a gold and silver project in Australia, but it's also got a high-grade zinc and precious metals project in Alaska. White Rock was predominantly gold and silver. We came across the Alaskan project in 2016, where it's probably fair to say that there had been a lot of talk about zinc prices improving, but it had taken a long time for that to come about, supply coming out of the market, some of the bigger mines, Century, Lachine, etc. When we acquired the project, it wasn't so much a view on future zinc prices. We weren't that clever. It was more the prospectivity of the project in Alaska as it unfolded, and there are others more expert than me on this. Zinc prices certainly improved from 2016. This year they've come off, and you've just heard that, they may stay relatively soft, but, there is no question that zinc prices are still way better than they were, 5-10 years ago. And so for a junior explorer, having a positive commodity price, whether it's zinc or copper or silver or gold or what have you, whilst the junior explorer is a long way from realising those prices in a production sense, it certainly adds to the sentiment for investors as they look for not just producers in that space, but also developers and that pipeline, who's going to be the next one. And so I think White Rock has enjoyed some of that zinc price uplift. Not that we'll be in production anytime soon, but it certainly added to the investment climate interest in that commodity for us.
And turning to Ricus Grimbeek, can you just tell us a little bit about Trevali, and I think following on from that, just from your perspective, what have been the key trends in the refined market for zinc, exchange stocks and backwardations?
Hi Andrew, yes, Trevali is a zinc producing company. We've got 4 operations in 4 different parts of the world. We produce about 400 million pounds of zinc a year. In terms of the trends, I agree with what Ryan said. You've got to look at it from a physical metal and also from a concentrate perspective. But I go back to the fundamentals and I look at the current LME stock levels, about 2 days of the world consumption, going down to possibly the lowest levels ever very soon. And you couple that with on the supply side, there are some big producers that will also come out of the supply chain in the next 3 to 4 years. So I think it might be a lot tighter than a lot of people are thinking. And being a producer myself, a lot of things can go wrong at an operation. And when you start looking at the 2 days of LME stock levels, that is very tight. The other thing I'd also point to is that treatment charges have gone up a lot over the last year as well, and we haven't seen the zinc price react to that. So a lot of concentrate producers will start to be under quite a bit of pressure over the next 6 to 12 months as well.
Turning to Don MacDonald of NorZinc. Wearing your zinc development hat, are grades falling? How can the metal be extracted cost effectively? And perhaps how is NorZinc addressing those challenges?
Thanks very much, Andrew, and thanks for inviting me to the panel. Regarding, where the zinc development hat and grades falling, clearly across the industry, grades have been falling for decades. And how has the industry really compensated for it? They've tried to be more efficient with less dilution, tried to be increasing mine throughput, and looked at new technology to improve recoveries, or in fact create technology that recover material from ore that couldn't be recovered previously. With regards to how the metal can be extracted cost effectively, in our particular case, we have very high grade deposits. It's 8.6% zinc, it's 8.1% lead, and it's just under 4 ounces per ton silver. It's a product which is so high grade, it's the third highest grade large development project in the world on a zinc and lead basis, at a combined 16.7% grade, and its size is about the 5th in the world in terms of undeveloped, with about 3 billion pounds of combined zinc and lead. So we have kind of a different issue, that we have a high grade deposit when the industry is going low grade, and I think the average for the industry in all the large operating projects is about 7% zinc and lead, and we're at 16.7% if you ignore the silver. However, having said that, we still have to be efficient. We're in a relatively remote location in the Northwest Territories, and although we have a very long life, 15-year life with our current reserves, and another 15 years probably with the development of inferred resources into reserves, but nevertheless we have to be efficient. And our technology that we are using is dense media separation. What that enables us to do is we actually mine 1,600 tons a day. We will, through dense media separation, remove about 25% of that, 400 tons per day, which doesn't go through the main part of the flotation circuits. So we're turning what is a combined about 16% lead zinc, or on an equivalent basis, a 23% zinc equivalent, into something closer to 28 to 30% zinc equivalent, which is actually running through the mill. And that's entirely done by using dense media separation. And the reason that works for us more than it does with some operations is because we have such a high volume of highly dense material, and because we have a relatively high dilution, we have 11% planned and 13% unplanned dilution, which turns adds waste into the ore. The DMS circuit actually removes that waste back, so we're losing virtually no grade, but we're gaining significantly in the grade that goes through the mill.
Thank you for that. I think that probably brings us on to our first polling question that will shortly be coming up on your screens, and we invite all the participants to go and vote. The price of zinc is approximately around 2,300 per tonne. By the end of the year, compared with this benchmark, do you think that the price will be, you've got 5 choices coming up on the screen, up by more than 10%, i.e. over 2,530 per tonne, sorry, up by more than 10% over 2,530 per tonne, up by more than 5%, i.e. 2,415 to 2,530 per tonne, within 5% of the current level, down more than 5%, i.e. between 2,185 and 2,070 per tonne, or down by more than 10%, i.e. below 2,070 per tonne. So we'll just leave the polling open for the next minute or so, just enabling you all to go and vote. Whilst we're getting our listeners to vote, perhaps I can ask you, Ryan, what is your opinion on what the price of zinc will be by the end of the year?
Thanks, Andrew. I think I think the zinc's had a pretty rough time. I mean, we looked at the chart earlier in terms of where it's gone from April through to now. I think it's possibly been a bit overdone. So I'd say probably within 5% of the current level. Why? And just some of the reasoning behind that. I think you've got sort of bullish and bearish factors that are going to play out for the rest of the year. On the bearish side, Don spoke about TCs being very high. Ricus spoke about TCs being high. This affecting concentrate producers, putting some pressure on. At the same time, on the smelting side, it's a record revenue opportunity for smelters, particularly Chinese smelters, and we're seeing that Chinese smelters are undoubtedly cranking up utilization rates. That's certainly going to put some. That's going to be on the bearish side. Another thing I would say on the supportive side is, one of the panelists has mentioned this. Some of the cuts are coming through. So you've seen El Toki, Arcata, Pendoriel, Campo Morada. These are already coming out. There is certainly some pressure at the top end of the cost curve, and you would expect that there's going to be somewhat of a balance starting to play now between the bearish and bullish factors. So I wouldn't be surprised to see the end of the year within 5% where we are.
Okay, and perhaps I can just ask one of the miners whether they have any sort of thoughts. I mean, I don't know, Ricus, whether you have any thoughts. Would you concur with Ron, or would you offer a slightly different perspective?
Yes, Andrew, I think I have to definitely concur with Ryan. I'd love to believe that it'll be much higher, but the reality is that I think it'll be within 5%. And the only outlier I would say is if there is on the downside maybe more uncertainty around the global economy, and then on the upside of the price, if there's a big supply impact somewhere, then because of the tight stock levels, I think there will definitely be quite a big spike. But yeah, other than that, I think within 5% by the end of the year, and also to go back to that, it's actually not a low price. It's a bit overdone compared to the last 18 months or 12 months, but it's definitely not a low price. Price is about 60 cents a pound. So the main thing for us operators is that we need to run operations in the second and third quartile to always make money.
Okay. Whilst Ricus was answering that question, we brought up the polling results onto the screen, and as you can see, there's quite a a relative spread of answers, but sort of either grouped behind sort of 39% thinking that the prices will stay between 2,185 and 2,415 per tonne, and 39% you thinking it will be between 2,415 and 2,530 per tonne. So thank you very much for our listeners who voted in. And I think with that, because I'm just quite keen to move on, let's move on to investment and some of the issues surrounding investing into zinc. Perhaps turning to yourself first, Don. What is the investor appetite like for zinc at the moment? As well as zinc, NorZinc has substantial lead and silver reserves. Does investor appetite change because of the presence of these other commodities?
Very good question. I think on the overall side here, the investor demand for zinc stocks is very low. It's one of the lowest it's been for quite a while here. I think that as a result of that, you've seen the equity prices be low, which is in my kind of 30 to 40 years in the business, when equity prices are low, that's always the time to buy. So I think from an equity viewpoint, it's a great opportunity, but I don't think zinc is on the radar screen of a lot of investors at the moment. Other than, I think, the private equity or the specialist funds, we are 40% owned by Resource Capital Fund out of Denver, the largest investor in medium to small size mining stocks around the world, with about $4 billion invested in those stocks. And they have been a strong supporter of our company. And we've had a lot of interest from other private equity investors as well. On the banking side, we have got very positive responses on the banking side, and also because of our large silver reserves, we have also interest from companies that are streaming companies that will take the offtake and basically finance, in our case, a substantial amount of the development costs of the project by taking a portion of our silver production. Going into more detail on our reserves here, we do have a very significant lead and zinc composite here. It's rough. We will produce more zinc than we will lead. 8.6% zinc and 8.1% lead. But the irony of the payabilities for zinc is that you get paid only 85% of what you contained, and you get paid more than that in lead. So we actually make more probably on our lead and silver concentrate than we will do on the zinc concentrate. But the appetite is I think the irony is that despite the fact that we are a polymetallic company, like I think some of the people on the panel here, they have deposits that produce way more, more than just zinc. I think it's the zinc that people focus on. But again, we have the added advantage with the silver. We're going to produce about 2 million ounces a year of silver for 15 years based upon our reserves, and hopefully carry on for another 15 years. That's a quite substantial amount of silver that can be a very important financier and cash flow generator for us.
Ricus, when you talk to investors, what are they looking for in a zinc project?
Yeah, I've had quite a few conversations over the last couple of months with investors, and it's quite clear. But it's basically what most investors want to know. It's the future of the business. Can you predict? Can you predict your revenues? Is it going to be sustainable? They definitely want to understand the supply-demand part of the zinc market better, because it seems to be a bit opaque for outsiders as to what that looks like. I think the other part that's been quite interesting to me is the adversity to risk in terms of certain jurisdictions where investors don't really want companies to be in these days. So it's a whole bag of different elements, and I would say one of the most asked questions would be, isn't this the time to grow? When as Don was saying, when the prices are low, that should be the time when you should be buying. Certainly, that's also something that they want to know.
Mm-hmm. Matthew, there aren't that many pure zinc mining companies out there. When you're talking to investors, how much are they interested in investing in White Rock, the company, as opposed to investing in a company that has a great zinc mining project?
Yeah, Andrew, that's a really good question. And a lot of what Don said is certainly the same for White Rock. We are ASX listed, and there aren't many ASX listed companies with exposure to zinc. So that is to our advantage. But it is true, when you are polymetallic, and to give you an idea, across our two projects, we've got over 600,000 ounces of gold. We've got 70 million ounces of silver, 1.5 billion pounds of zinc, and 500 million pounds of lead. So it's quite a spread. And as Don said, those chasing zinc, there aren't many in Australia. It is quite specialist and not really a retail story. And there's only probably a few institutions that would probably invest in a zinc associated company. So in some ways, I think the polymetallic diversity that we've got is to our favour. I think it spreads a risk in terms of that supply and demand if you're just one metal, which can be an advantage. But if someone is just chasing that one metal, then if you've got more than one, it can be a disadvantage. So I've learned, and I'm a humble mining engineer, I've learned that you can't please every investor and you can't please every shareholder. But what we can do is provide an alternative investment proposition. So, it will come down to the investor's mandate, what stage they want. Are they an explorer, developer, or producer? What jurisdiction they want to be in, Africa, Australia, North America, and what commodity or commodities. And we think we appeal across, a lot of that, but we're not a pure zinc player. But given there aren't many in Australia, we do pick up some interest because we do have zinc in our portfolio.
Mm-hmm. Turning to Ryan, we obviously hear a lot about geopolitical risks. From your perspective, which geopolitical factors specifically impact zinc supply and demand, and how do they go and feed into investment decisions?
I think there's it's a good question. I mean, certainly if you look at, I'll sort of split this up in a few countries. If we start with China, I think the blue sky movement that sort of emerged over the last few years has been real. I think a lot of people didn't necessarily believe that it would be maintained. So the environmental restrictions have been key. You know, zinc prices, when they started, they move up really sharply in 2017, 2018. I think a lot of the industry expected, as in past cycles, that Chinese mine supply would ratchet up at double-digit growth. It never happened. At the same time, you were actually having widespread closures of non-compliant mining operations. You had, you know, non-compliant tailings dams and no tailings dams at all. So some areas had widespread bans put in place, and the consequence was that actually mine supply in China fell in 2017 and 2018. Now that surprised quite a few people. Now, moving on the smelting side, there's a similar sort of environmental push, and that's on the residues and slags being produced from hydrometallurgical smelters. And you know, you've had some impact there. It's definitely impacted why Chinese smelters haven't raised utilization rates quite as quickly as some people thought they ought to, given where TCs are. So I think that's key. So in China, that's key. I mean, you certainly see about community issues being a big one in South America, and you know, Penasquito, the blockade being a very key example recently. That's had a big effect on the lead concentrate market. And if you look down in Peru, I think what was happening, the protests around Tia Maria and the subsequent blockades at the Matarani port have impacted copper concentrate supply. So, you know, the community issues are a big one. I think you're definitely seeing in Mexico. I mean, on the 12th of August, it was announced that there's going to be a ban on new concessions being granted. I think this will be subsequently relaxed somewhat, but it also serves to show that there's certainly a move in countries, and it's I think that's important. That's going to have an effect on supply demand. Permitting has always been an issue, and I think to get that through will be lengthy. And I think certainly with the community issues and the social side being more and more important, I think permitting and the rate of getting all those required permits will take time. So I think what some of the other panelists have mentioned earlier about jurisdictions and key jurisdictions to invest, I think is key. So you know you're looking at your Australias, your North Americas. I think that's going to be key in terms of driving the investment decisions. And you know, maybe one that's perhaps a little bit less geopolitical, but it's more geological, as one of, you know, Matt mentioned earlier, which is I think an extremely valid point. If you look at the supply demand of a number of the metals, you know, zinc it's very rare to find zinc on its own geologically. These are generally exhalated deposits. You generally find lead, zinc, silver, various precious metals. So the investment decisions is something to favor as well. So I would definitely second what Matt has said about that.
I think that with that, let's perhaps move on to our second poll of the webinar, and we'll just bring that up onto the screen now. And just again, would actually like to go and invite all of you just to go and vote. And the question that should be coming up on your screens now is that for 2020, do you think the price of zinc will outperform copper, will broadly track copper, or will underperform copper? So just a choice of three choices: will outperform copper, will broadly track copper, or will underperform copper. And whilst all of you are sending in your votes on that, perhaps I can go and press Ryan with a further question. With company with zinc exploration projects, other than of course NorZinc, White Rock, and Trevali, are there out there that currently excite you?
Exploration level projects, we don't tend to have them so much on the radar. We tend to focus a little bit beyond that, but I mean, there's a lot out there, Andrew. I think quite a lot of these projects have been sitting around for many decades. You know, in terms of some of the ones that, you know, come to mind outside of China, Macmillan Pass, you've got Chinese NFC, which is involved in a few Diary in Indonesia, Citronen in Greenland, up in Yukon, you've got Kudz-Dikeo, which is an interesting one. It's been around for a while, but very interesting from that polymetallic aspect. You know, it's got something like 6% zinc, nearly 2% lead, 0.9% copper, 138 grams per ton silver, 1.3 grams per ton gold. That kind of project I think is very interesting, because if you look at your net smelter return per ton of ore, you've got very valuable ore there. So if you turned it into a zinc equivalent, you've got very valuable ore. I think polymetallics They sort of excite me in terms of the risk and capital intensity profile. I think there's a really interesting one in terms of China is somewhat the opaque big gorilla out there in terms of what's lying there. But we heard a lot of news in 2017 about Xinjiang, the province of Xinjiang, and a big find there called Huashiyun. Now this is an absolutely enormous deposit with potential to produce over 500,000 tons per year of zinc and over 100,000 tons per year of lead. And this is grading at 24% zinc and something like 16% lead. So you have oxide ore, but very, very high grade. So I think there's something interesting up there. It's very high altitude, very remote. So whether that's going to be developed, I think you need a push to develop a district in that kind of area. I've heard about something in Guizhou recently, Zhonggun Tang. So it was discovered in July 2018, about 7.5% zinc, 2.5% lead with precious metals. Producing could produce in the sort of 100,000 ton per year zinc range and and a reasonable amount of lead. So I think there's a lot of projects out there. I think the key is going to be on the permitting, and they can't be too remote. And if they are remote, you need that sort of push as a development district rather than because if you're not going to get a project developed if it's a lone ranger if the infrastructure is not in place. So Red Dog, it works because it's a massively important high grade deposit, and that was an example of that. But if it's smaller, I think you're going to need the backing of local infrastructure and or a few other projects working together.
We just had a question sent in from the audience. I guess it's a question for any one of the mining companies, but I'll probably just throw it to Matt first. When you're talking to investors, what sort of timeframes do you say to potential investors that they should take before investing into your company or into a zinc mining project?
Yeah, that's a good question, and it's sort of related to a previous one. So we're at the advanced exploration stage with our project in Alaska. It's 9 million tons of just under 13% zinc equivalent. In value, it's 40% zinc, it's 30% silver, and then equal amounts of lead and gold. So when you're in advanced exploration, we've got 475 square kilometres. We're in joint venture with ASX listed Sandfire. We've just done our second season on the ground, of which the first season with Sandfire this year. We tell people advanced exploration, we don't know what we've got. We've got a JORC resource already, as I've described. We don't know how big this is going to be. VMSs come in camps, come in clusters. We've got 30 odd targets. You get a fairly tight window for exploration in Alaska. It's sort of 6 months a year, so you've got to hit it hard. So when I'm talking to investors or they're inquiring, we're at that nice part of the development cycle where the excitement is in the exploration and the news flow and the upside. We've all seen that, development graph. You're on the left and it's exploration, it's exciting. It then sort of drifts south again when you're in that approvals development, and then picks up again when you're close to production. So we sit nicely in that early stage. Obviously, the downside is we don't enjoy high prices when they occur. That is 3, probably more like 5 years out for us. But we sit nicely if someone's wanting exposure to the upside in a zinc play.
Okay, thank you very much for that, Matt. Ricus, I wasn't too sure if you had anything to kind of add to Matt's answer, or from your sort of experience when you're talking to investors, what do you say to them about timeframes that they should be looking at?
Yeah, maybe just as an operator, I think what would I tell them is that the time to invest is right now, because I think a lot of zinc companies, especially if I look at just at Trevali, is definitely oversold. And it's the time to really invest. I think if I look at Trevali, one of the things that we are focused on at the moment is to rebase our cost structure. we want to get all our operations to below $1 per pound, even below that, like 95 cents a pound. And we want to grow the business. So I think that's what I keep on showing them is the time to go is right now.
Okay. And then as Ricus was answering the question, we brought up the polling results. I think for the 63 of you that voted, you actually split particularly evenly between 33% will outperform copper, 33% will broadly track copper, and 33% will underperform copper. So thank you very much for all those who voted. So let's now move on to issues surrounding zinc production. I guess probably just going back to yourself first, Ryan, how are majors and mid-tiers ramping up their zinc production?
Okay, I think there's a few. So we had the initial cycle really this time around really started end of 2015, and we know about the Lachines and the Centuries that ended. And at the time, zinc prices fell toward I think $1,500 per ton, and you had Glencore pulling out a lot of supply. You had Nearstar pulling supply, so you had a lot of that supply pulled, and that really started the tightening cycle in the concentrate market. And as we discussed, it's taken a long time to flow through to the refined market. But what's happened since and what's happening now is, Glencore has brought back Lady Loretta. So Lady Loretta as a component of Mount Isa is ramping up, and it has been over the past 12 months. MacArthur River is also producing more, so Glencore increasing supply. Hindustan Zinc, massive producer. They have expansions running at Rampura Gutcha, Sindasar, Rajpura, and Zavar. So they're targeting 1 million tons of zinc and lead in fiscal year 2020. But by the end of it, I think they're looking to get to a run rate of 1.2 million tons. So they're expanding. Gamsberg is obviously the big South African development. They are ramping up. You'd have to say something about Antamina. It's really a copper mine, but it produces sizable amounts of zinc. So this year we expect it'll be producing quite a lot less, going through mine sequencing, lower zinc grades. But certainly through 2020 and 2021, you're going to see at least 150,000 tons of incremental supply from Antamina. Red Dog, so Teck's Red Dog. I mean, they've been expanding throughput there at slightly lower grades, but overall metal output has been rising. And then some of the others, some of the other players, Panellists. I mean, you're starting to see some things like Fresnillo and Cito, which have traditionally been your primary silver mines or very important primary silver mines. They're putting more massive sulfide ore through the mill, so you're getting higher lead and zinc output at both those operations, and we'd expect that going forward. Yeah, and otherwise, I think Ricus would be well placed to talk about Trevali. I guess they're the biggest pure play zinc miner out there. So I mean, but what I've just discussed is really the majors, Glencore, HZL, and so forth.
Mm-hmm. Matt, what's happening at the exploration end of the curve?
Yeah, that's a good question. I think. I mean, we watch a lot of the juniors, and there aren't many pure play junior zinc explorers that we are aware of. There are some companies in Australia that have caught that rising zinc price and are now commissioning and into production. There's Heron Resources here in New South Wales. There's New Century, also in Australia. We do watch those in North America. We're in the same rock belt as KZK, which was mentioned earlier. That's going through permitting. And Agnico Eagle have a VMS deposit that's only 150 k's away from us. Certainly aware of some, Mexico zinc, South American, but pure zinc juniors. I am actually quite glad that White Rock has that product diversity. We're catching a wonderful wave of interest from Australian gold. It's doing extremely well, and speculation on silver. I think if we were just pure zinc as an explorer, it would be a little bit tough, having come off the highs of the last year or two. But as has been said already, zinc does often come in that polymetallic nature, and I think that's to the advantage of any junior that they have more than one egg in that basket as they try and obviously appeal to the investor, raise the funds, and get on and develop a project.
Ricus, what is the significance of byproducts and co-products in the production of zinc and in ongoing investment opportunities? And perhaps in your answer, you could explain to listeners the difference between by and co-products.
Yes, Andrew. I think we spoke and all the speakers have mentioned polymetallic as quite an important differentiator, because you don't really get just pure zinc ore bodies. So it's more like a co-product, lead zinc, and with sometimes the byproduct of silver. So co-product, in my definition, is something where it's got about the same level of importance on the revenue side. And the byproduct really is just something that is produced as an extra. So, for example, ethanol in sugar production is a great example of a good byproduct. But just to go back to the importance of these type of products, they do help a lot with the revenue stream, and they do help diversifying the revenue for producing operations. The one thing that I'd maybe highlight that hasn't been mentioned yet, that I think is also quite important to keep an eye on, is contaminants in the ore bodies as well, because there are a lot of dirty concentrate out there at the moment, and a lot of that would be trading at quite a discount to the cleaner concentrates. For example, Trevali produces a really, really high quality concentrate. So you can also in future see a premium on the higher quality concentrates that will be needed to blend the more dirty concentrates. So yes, on the production side, I think we've mentioned I've heard some really good examples of new projects coming on. The only caution I would put out there as an operator is that paper is very patient. It always seems quite easy to ramp things up and to build new things. It's actually not that easy in practice. And I think one of the other points that were made around permitting and communities is one of the most underestimated parts of mining at the moment, I believe, is the importance of the sustainability side and the social side of our business. And that's why if you look at Trevali's record, we are and want to be one of the best in terms of our sustainability record and our ability to work with communities and also get our permitting sorted out. And not just sorted out in getting new permits, but also keeping permits.
Okay, thank you very much for that. Just moving on to Don. Are there other market forces out there that are also impacting zinc production?
I think there are other panelists here that are much more expert than me in that area. Clearly there are other market forces that are affecting this. Price is influenced by, the short-term price is influenced by, the trade wars and situations that have happened, certainly with the Chinese supply, but also the relationship between the US and China has seemed to have effect across the market, across the board. But that's hopefully a temporary factor. And I think one of the key slides that you put up earlier on, which is the zinc gap forecast, and if somebody's able to put that back on the screen, but that really shows what we have in the market here, in the sense that we have going forward here a gap in production. And I think that although the fact is that the zinc prices are low, the TCs are extremely high, they are not going to stay like that. And I think it's critical to look at your investments and look at where you're going to be in a few years' time. That's the chart. Yes, thank you. You can see the gap starting in basically 2022. And so that's the time when you want to be in production. We have a relatively low capex project, 250 million US total capex. It's an existing facility that's being refurbished and slightly expanded, and access by an all-season road directly to the project, so we can get access directly from the mine site ultimately to Vancouver. The material will be trucked to a place called Fort Nelson and then railed from there to Vancouver. So access directly to the project, which is a critical element in places like Alaska and even places in Africa. So I think we have low capex, and we have a good access that ultimately will benefit us. But I think people need to look at production cycle. We'll be starting construction in 2020. We'll be into production by the latter part of 2022. So full year production of 2023. So it's right at the point that that gap starts to expand. And that's where you want to be. And so from an investor viewpoint, we, and I think everybody on the call here is focusing on, where is this going to be in a couple of years' time? Because we're in a multi-decade, multi-generational business here that provides tremendous support to local communities. It provides tremendous wealth to the communities that you're in. And you need to, be looking on a long-term basis, but you also need to be able to get your investors to focus on that rather than on the short term. And a final comment on the short term, I think it's been said before. You've seen the smelters; they're really focusing on now. There are groups within the smelters that are looking, 5, 10 years out. But so much of what we're seeing is just dealing with the now. And I think that what matters is where we're going to be in 2 or 3 years' time, and I think that's going to affect everybody on this call here. Is where is this market going to be in 2 or 3 years' time, and are we going to be looking back 2 or 3 years' time and saying, "Wow, we're glad we invested our money in this business at that time, because now we're going to reap all the benefits."
Question that's been sent in by one of the webinar listeners, talking about dirty concentrate. Do you think that Chinese import limits will be lowered, especially for arsenic and mercury? Would anyone care to take a stab at answering that?
I'm happy to try, Andrew. I think currently the arsenic limits, if I'm not wrong, are 0.6%, and there's a limit on, and there's a proposal to bring those down to 0.4%, but at the same time introduce a few other elements, so things like fluorine, thallium. So I think the point that Ricus made is very important. TCs for clean concentrate are very high, but trying to place material that's got elevated silica or manganese or things like thallium, fluorine, or chlorine, especially if that is passed by the Chinese, that would be very, very important. So that would undoubtedly increase the need for blending and having high sources of clean concentrate to blend. So yeah, I think the proposal is to lower arsenic, but at the same point, it's to introduce additional elements into that into the restriction. So that would net for net, I think, make it more difficult to get a lot of the concentrates into the country without blending.
Okay. Let's perhaps move on to our third and our final poll that we'll bring up on our screen now. Apart from the performance of the global economy generally, what do you think will be the most important determinant of the zinc price over the next 5 years? Chinese economic performance, a widening supply gap, urbanization and increased consumption of white goods, the use of zinc in batteries, or declining ore grades in zinc deposits? So we'll just leave that sort of polling open for another couple of minutes. Just actually, whilst we're waiting for your votes to come in, perhaps just a further question for Ryan. Where do you think the next major zinc discovery is likely to be, and what is the role being played by majors and juniors in this exploration effort?
I mean, I think that zinc is very different from an industry like copper, and that you can literally count the mega deposits on one hand. If you think of the MacArthur Rivers, the Mount Isas, the Rampura Gutches, the Red Dogs, they're quite rare, and because of that, you haven't typically had majors making a big move into zinc. It's more copper. So I think you've got an important role for the mid tiers and the juniors, and obviously exploring and looking for these potentially long life, low cost assets. Where they're going to be, I mean, geologically, you need to find areas where there's been extension, but I think, you've seen a few interesting ones, Bisha and Asmara in Eritrea. So either side of the Red Sea there, Saudi Arabia, Jebel Said's more copper, but either side of the Red Sea is a reasonable setting to look. There hasn't been much found there, but we have to bear that in mind with the geopolitical situation and the jurisdiction. What I find particularly interesting is that you've only got one major zinc deposit in the copper belt in DRC Zambia, and that's Kipushi. So Kipushi's staggering. I mean, I actually went down the operation in 2015 and picked up a piece of sphalerite. It was pure sphalerite, grading over 50% zinc. So what I found pretty strange is why you'd only have one of those in the DRC. I suspect there's more to be found there. And I mentioned earlier Xinjiang. I think the 5,500 meter altitude, you found the Huashiyun project there. I think there's undoubtedly some hidden monsters in that region of China. So I think it's going to be a case that it's going to be the juniors to the mid-tiers that will find them. And the really big long life ones, you'd probably see the majors making acquisitions.
Okay. Just whilst you were answering that question, Ryan, we just brought up the results of the final poll. So perhaps turning back to Don of NorZinc first, do the poll results surprise you that Chinese economic performance is the #1 factor? I don't know if you have any kind of comments to add.
Not really. No, I think that is, well, I'm not surprised at all. Yeah, it is, I think, a major factor to the zinc price. I mean, I think we say over the next 5 years, in 5 years' time, things can change significantly, but certainly if you look backwards 5, 10, 15 years, China has been such an important factor in our business that, and we've seen that the China-US relationship has been, a factor. So yes, that would concur with what I think makes sense here. But I guess what I'm saying is that maybe 3 to 5 years' time, we'll be sitting here having a different conversation because some other thing will have happened that will have changed this.
Okay, thank you very much for that. And finally, just a quick question to all of our panelists. Overall, in one word, are you bullish, bearish, or undecided over the prospects for the zinc price over the next 12 months? Turning to yourself, Don, what's your answer?
Yeah, I'm bullish.
Ricus?
I think.
Yep, definitely bullish.
Matt?
A fourth word, steady.
And Ryan?
I'd say neutral to bearish for 12 months.
Okay, slightly longer than one word, but that's fine. Look, thank you very much, Ryan. Thank you very much, Don. Thank you very much, Matt. Thank you very much, Ricus. And thank you very much to all of our webinar panelists for listening in. You've all provided a really excellent insight over the course of the last 45 to 50 minutes. We will, of course, be covering zinc in great detail at our upcoming Mines and Mining London event on November the 25th to November the 27th. All listeners to this broadcast will be entitled to a discount by using the following code, MMLWeb, that's coming up on your screens now to claim a 15% discount. For more great news and content, please check out our dedicated website at www.miningbeacon.com. My name's Andrew Thake. Many thanks and see you again soon. Thank you.